Good afternoon, everyone, and welcome to Stock Market Today. Allie Corman-Kintreve here with a breakdown of the action in today's market. And we did not see the strength, Ken, that I think we were hoping for after the heavy losses that we saw in Wednesday's session. So not a stunning upside reversal for the major indexes today.
No, that is correct, and those hoping that the bulls were going to come in and offer some buying support after the sell-off Wednesday were left disappointed. So the Dow lagged today. We're looking at the Nasdaq here closed. Looks like it's going to close in the upper half of its range, but faded late, and the S&P 500 was also a little suspect today. So no buyers coming in after Wednesday's sell-off, but we do have three stocks to look at that are acting well in the energy sector. Obviously, these energy stocks are working, so we'll take a look at the Energy Select Sector Spider ETF, XLE, that's still in a buy zone here, and two bright spots in technology, Silicon Motion Technology, SIMO, and Extreme Networks in the Red Hot Networking Group.
Yeah, still some pockets of strength out there, but as you said, the Nasdaq not looking great here. It did close off lows, though, down about 0.1% for the day, above that 15,000 level. We also had the Dow down about 0.5%. The S&P 500, like the Nasdaq, down about 0.1% as well. Small caps did manage a gain today, up about 0.5%, Ken. So again, that 15,000 level and the lows from late last year are pretty critical to hold at this point.
Yeah, exactly. And at this point, it wouldn't be a big surprise to see the Nasdaq, even if these lows don't hold. It seems likely that we'll get a test of the 200-day moving average here, and we'll see if the Nasdaq can find support. There's a lot of sick stocks out there right now, and when stocks sell off in very heavy volume, sometimes that recovery period can take a little while. So we have certainly an uptrend that's under pressure here. We were hoping for some meaningful buying demand today. It looks like we got higher volume on the Nasdaq, but it just really couldn't make much progress. So it still seems like a sick market, and we'll just continue to see how things play out.
Yeah, and a quick check-in on the S&P 500 and Dow as well. So the S&P coming down to a test of its 50-day line. Looks like support is holding there for now. We also have the Dow coming in a bit, but holding right around its lows from a couple of sessions ago, still above the 36,000 level. And it's the Fed and Treasury yields that are continuing to be the story here in a big way this week, Ken. So the 10-year yield continuing higher today, and now really within striking distance of the highs from March of last year.
Yeah, I mean, this is just a breakout for the 10-year yield, and everybody's wondering when it was going to happen. It just seemed like it should happen with the Fed being so hawkish. And next week, we're going to have earnings reports start to kick off in the financial sector. Wells Fargo has had a beautiful breakout this week. We'll hear from them a week from tomorrow, and also J.P. Morgan reports on the same day, and then the following week more financial reports. So financial stocks are all of a sudden very much in interest. People wondering if this yield curve is going to steepen, which typically will help profit at a lot of these banking stocks. But the banks continue to be a nice pocket of leadership here.
Yeah, same with energy. So let's take a look at XLE, the Select Sector Spider ETF for the energy sector, up over 2% today. Some volume coming into it this week. Didn't have a great close yesterday, but the market didn't. And I mean, it really had a fractional loss. But this week, a strong gain for XLE, up 9% for the week. And we still have one trading session to go.
Yeah, when you look at the weekly chart here, even though it's made a big move this week, it's still, it's still technically in a buy zone here. I mean, based on a conventional entry of 59.51, it's not too far gone from that price level. So I really like the look of the weekly chart here. I mean, you could wait for a little pullback and wait for maybe a lower price, but according to our buy rules, it's still in range here as it holds just above the 60 level, and again hasn't gone too far past the 59.51 entry.
It hasn't, although I will say when XLE was clearing the 50-day line to kick off the week, we noted that as a potential early entry here. So investors who were able to get in at that level, sitting on some nice gains at this point.
Yeah, absolutely. That was a nice clean trend line when the stock initially moved above that 50-day moving average, and we've seen a lot of that lately. Sort of these early entries, but if you're still looking for oil exposure, I think a starter position here in XLE is still looks good. You just have to remember the two highest weighted stocks in this ETF are ExxonMobil and Chevron. They make up more than 40% of the fund, but also in the top 10 holdings, a couple of really strong performing oil and gas producers like Pioneer Natural Resources, PXD, and also EOG Resources, two very liquid large cap top performers in the energy group.
Yeah, good point there, Ken. It's definitely important to know what you own with these ETFs. And switching gears here, let's take a look at Extreme Networks, EXTR. This is a red hot computer networking group. While tech largely has been suffering this week, this is a group that looks like it's holding pretty strong, at least Extreme Networks, with a relatively mild pullback to the 21-day line, continuing a pretty powerful move since its earnings report in early November.
Yeah, and the stock has really done a good job holding gains after this breakout from that consolidation over the $12 level. It ran up to 14, pulled back to the 21-day, then ran up over the 15 level, and now it's just pulling back in orderly fashion and finding support at the 21-day moving average. The networking stocks are. Colleague Reinhard Krauss did a great story on what's moving these networking stocks, mostly because of just optimism about the nascent metaverse, and these networking stocks should see improved business as the metaverse continues to become more of a reality. So the networking group is still home to a lot of leading stocks.
It is, and it's interesting because this is a stock that went sideways for the majority, if not almost entirely, the whole year last year, except for the month of December. I mean, its earnings report again in early October, but the breakout didn't happen until late last year, a couple of failed breakouts in a row. So I think this goes to show just because you've seen a stock that's been sleepy doesn't mean that it can't wake up and retake that leadership position.
Well, listen, I've met a lot of savvy growth investors over the year that just love to see stocks coming out of these long sideways consolidations. I mean, it's one thing if a stock bases for 6 or 7 weeks and digests gains and breaks out, but if you just get kind of these longer sideways periods, it really is just a coiled spring for the stock. So if you get a good earnings report like Extreme came out with, like you said, the latest earnings report, that fueled a meaningful breakout here, and this one is still making a case it can continue to be a leader in this networking group.
All right, and last but not least, let's take a look at Silicon Motion Tech, SIMO, in the data storage computer group, which is 23 out of 197, and it also is pulling back to its 21-day line after a breakout in early December.
Yeah, I mean, this is the data storage group. You tend to hear a lot about Micron Technology and Seagate. This is a lesser known name in the group. They make flash controllers for solid state drives, but this is another stock that just a beautiful breakout from from a sideways consolidation, and it really hasn't given up much ground. It came down to its 21-day moving average today. A little bit of volume in the stock today, while the Nasdaq struggled. This one outperformed, and there was pretty good volume after a fairly mild drop on Wednesday.
All right. Well, couple of stocks to watch there. Thank you, Ken, and thanks everyone for tuning in. We are turning our focus now to Swing Trader Scorecard coming up in about 15 minutes from now. So if you are a subscriber or trialist, make sure you go to swingtrader.investors.com for our monthly webinar that's going to take a look at not only December performance and strategy, but also a look at the entire year of 2021 and some thoughts from the team about what's ahead for this year. So really looking forward to that. We'll see everyone there, and we'll also see you tomorrow morning on IBD Live, where we'll be joined by special guest Eve Bobach of the Life Cycle Trade. Always great to get her thoughts on the show, longtime CanSlim investor. And then Chris Gessel and I will be on Barron's Live at noon Eastern, talking about strategies for volatile markets. And you can sign up for that webinar at barrons.com/live. Thanks so much for tuning in, and we'll see everyone right back here tomorrow.